What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future, and why tomorrow is going to be an absolutely massive day as CPI is coming out. I'm going to break down when it's coming out, what the data is telling us about Tesla, and what some projections may actually cause for the stock market as I go over some hypothetical situations with you guys and talk about how this could affect SPY and Tesla. But before I do that, before I get into any more details about Tesla and SPY and CPI, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks plus free level 2 data with $0 in trading commissions. And if you put in $1,000, you're guaranteed up to 15 free stocks. They could each be worth up to $2,000. It's a limited time offer. The offer ends tomorrow, so check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla ended up underperforming relative to the market. And I want to note something very important. I did make a prediction yesterday that the market would get a bit of a rally approaching CPI, and my target for SPY was about 412. That is what ended up happening. But I also must note that although it's awesome to see the market rally like this approaching the big day, this does not matter too much. Technicals do not matter, at least when it comes to predicting tomorrow, because tomorrow is heavily dependent on CPI. I also predicted that the QQQ would rally to about 305. We ended up closing at 304.5, very close. But once again, this does not necessarily give us a good idea of what will happen tomorrow. We did see some tech stocks try to rally a bit. I know Microsoft got a pretty decent day, so did Apple, but Tesla was one of the few that ended up underperforming. And this is often a sign of exhaustion from the buyers. When looking at the data, Tesla's price pairs ratio is starting to actually slow down. It looks like it hit its peak temporarily, and now Tesla is not getting the same crazy squeezing it saw from before. This does not mean that Tesla is dead. It just means that it's likely going to see a slowdown in its overall push to the upside. And that often happens because of the fact that it's completely healthy for stocks to slow down like this. Now, the thing about this is I am talking about this from a technical standpoint. And even though this likely has lots of merit, it does not tell us too much about tomorrow specifically when it comes to CPI. I just want to make that very clear. Now, many analysts are still very bullish on Tesla. We have some very awesome fundamentals, and the volume on Tesla is actually pretty decent. It's still at about 172 million, pretty nice volume. But once again, we have to just wait and see how tomorrow goes. Now, a lot of the market is still pretty bullish. We're still getting lots of call volume. We're still seeing retail buying in, and we are still seeing lots of excitement, lots of greed in this market. The bulls have not capitulated, but at the same time, there's neither side is really like winning, at least going into tomorrow. We're kind of in the middle still, in my opinion. Now, if I were a market maker, I want to note something else that's important. If the market makers are, playing in this game, if they're manipulating the stocks, which they most likely are, they're incentivized, okay, to be pushing the market up, given the fact that Max Payne is very close to where the price is. And then, even though Max Payne is a little low for Friday, we have a crazy amount of options expiring on Friday, and there's a 2.9 puts to call ratio, meaning that the majority of investors, the majority of institutions are loaded up on the put side for SPY. They're betting that the market's going to come down. This does not mean that just because everyone or most people are betting that the market's going to go down, it does not mean it's not going to happen. But you have to remember that the market makers are going to try to push the market up. They want the market to push up. They do not want to pay out all of these calls, and I'm sorry, all these puts that are out of the money. But at the same time, there are big bears out there. There are big institutions that might want to make a lot of money too. So it's going to be a big battle. They're going to be market makers trying to push the market up. But at the same time, the big bears, the other institutions, are going to try to push the market down. Now, going into the data, what's happening for tomorrow? Okay. 1 hour before the market opens, at 8:30 a.m. Eastern Time. CPI year over year, core CPI year over year, and all the data month over month is all coming out. It's going to be very important. Right now, the consensus is about 5.5% for core year over year and 6.2% for CPI overall. We are anticipating a bit of an increase overall, though. That is expected because of the fact that inflation likely is going to be inflated a bit because of energy. So please be prepared for that. Energy did see a bit of an increase, and at the same time, we saw food increase a bit as well. So we're not going to be surprised by it being high. The real question is, to what degree is it going to be higher than expected? Is it going to be lower than expected? Is it going to be high but like lower than the expectation? Right? There's so many variations of this. Now, what else is important is the fact that there are going to be some adjustments to the way it's going to be calculated. And I do find this a little bit suspicious how it's all of a sudden happening after the big jobs report that came out for the month of January. Who knows how this is going to play out, because this CPI report is for the month of January, right? The data takes a little bit of time to process, to be calculated. And as it's coming out, a lot of investors are going to be watching some very specific details. Now, food and energy make up a big part of the overall CPI number, but the new revision is actually adjusted so that housing makes up a bigger percentage of it. This article right here talks about the fact that housing overall will account for more than 44% of the total calculation. That's going to be very important. And there's going to be another segment known as equivalent rent or owner's equivalent rent, which is going to account for more than 1/4% of the calculation. So housing overall is going to make up a big part of it. And used car prices have also lowered in importance after a year in which the wholesale and retail used car prices fell out of sync with one another. So very interesting stuff. Housing is now going to be even more important for the numbers, and this could cause a very big change in the data. Now, I'm saying this because of the fact that when you look at the revised versus original core CPI reports, you could see that there are some differences right over here. There were some instances where the original way of calculating it would have caused it to be a little bit higher, and then other instances where the revised version is going to make it higher too. Specifically, right here at the very end, you guys can see the green line is a lot lower than the red line right over here. Maybe not a lot lower, but at least somewhat lower. And this is important because the data is telling us that the original way of calculating CPI appears to be underestimating it compared to the revised version. And also they revised, the December numbers to be actually 0.1% up instead of negative 0.1% month over month. So that's important now because we are seeing this potentially causing the overall CPI to be a little bit hotter. We don't know for sure, but it likely is showing signs of an uptrend, maybe a small push up. The real question is to what degree. I can't really calculate exactly what it's going to be. Nobody truly can, at least as of right now, until the data comes out. But we'll just have to wait and see, right? Now, I also want to note that there are many analysts that are expecting it to be a little bit hot and a bit of a shock to the markets. Now, no analysts know the future perfectly. Nobody could predict it exactly, but there are some expectations out there that it could shock the market, and you have to be prepared for that nonetheless. Now, as far as energy prices go, we did see a bit of an increase in retail gas prices on average in the United States for January compared to like December. And we are going to likely see that inflate the overall CPI. And that's the reason why CPI itself is not everything. This other very important person, I believe they're from the Fed, his name is George Ball. He mentioned the fact that core CPI is also going to be very important, and anything under 5.5% would likely be a short term upward catalyst for the stocks, and anything above 5.5% would likely be viewed negatively over the short term. Now, this actually leads me to now transitioning into this part of the video. Looking at the numbers year over year, I want to note that, in my opinion, all right, year over year CPI, even though this is not everything, I'm also going to talk about core in just a couple of minutes as well. I want to note that because both of them are very important. Now, if CPI year over year is up about 6.5%, that is going to be horrible for the bulls, in my opinion. That's going to likely lead to a 4% crash in SPY, likely a big drop in Tesla as well. Tesla would be down over 4% most likely. Tesla does have a tendency of actually having a beta above 2, meaning that Tesla would probably be down about 6 to 8%, maybe even more than that, if the whole market does crash off a very high report, maybe closer to 8%, right? If it's like 6.4 to 6.3%, that's also going to be kind of bad. I'd expect around a 2% drop, maybe a little less than that, but something like that. Tesla could be down over 4% during some instance like that. Now, if it's 6.2 to 6.0% or just exactly 6, that could be okay. We could see maybe a 1% move to the upside, maybe even a flat day overall compared to like comparing like open and close. It wouldn't be as bad because this would be very close to expectations. But if we do meet expectations and see like exactly 6%, that could actually cause a 1% move to the upside. So it's going to be very close. It won't be as bad if we get something like this. And anything below 5.9%, if you see that number for year over year, that's going to contribute to a nice move to the upside because overall, that would show that energy did not actually inflate it to the same degree the market thought. And this would also support Jerome Powell's claims of disinflation, of inflation cooling down. It would actually support his narrative. It would support the whole premise of a soft landing. And I personally do not believe in it, but I'm just saying right now, the market has been rallying off that sentiment, and that would actually contribute to it. Now, what else is very important is core CPI. If it's 6 to 5.9%, that's going to be horrible for the stock market as well. And by the way, core CPI, once again, is CPI without food and energy. Please, please, please watch this as well when the data comes out. 6 to 5.9% is going to be horrible for the stock market. I'm saying this because this would likely lead to a big drop overall. And what's going to happen is we might see a lot of capitulation. A lot of the bulls will actually panic, right? If it's 5.8 to 5.6% overall, this could lead to a bit of a drop, maybe over 1% to 2%. This would likely cause Tesla to come down as well. Tesla would be down over 4% in that hypothetical situation. If it's 5.5 to 5.4%, it would be aligned with expectations, which could actually lead to a flat overall day. And I'm not saying we're not going to move at all. We'd probably move up quite a bit, but the close could be pretty flat or maybe up about 1%, depending if it's on the lower end of this. And Tesla could be up like 2% hypothetically if it is somewhere between these expectations. And if it's 5.3% or less, it would actually be quite a bit lower than expected. We could see the market rally off of that, and Tesla could make a nice move to the upside as well. Now, I did give you guys two different metrics of CPI. You have to follow both of them, right? You have to look at them both at the same time, right? And I'm saying this because I want to warn you that CPI might be a little bit inflated by energy, and that's the reason why, core is even more important during this cycle. So there is an increased probability that CPI is going to be either like on the okay end, the higher end of okay, or maybe a little bad, a little bit on the bad side. And that does increase the odds of a bit of a drop, but that won't matter as much if core ends up being a little low. And I do believe that core is not going to increase the same way that CPI does because of how much energy is going to inflate it. So core is going to be just as important. And my guess would be somewhere in the okay zone, maybe not too bad. So that's just my guess. I really don't know. And I want you all to be prepared for anything just in case. And once again, look at both core and both the entire reports and CPI and everything that's coming out for tomorrow. It's going to be very important. So what does this all mean for the charts? Just to end the video real quick, for SPY, I don't know what's going to happen, and I do want you guys to be prepared for lots of manipulation. There's going to be a lot of tricks that come out. They're going to try to push the market down on some instances or push us up. What could happen is we might get a gap up. If we do gap up, be prepared for a potential push down, whether it's a fake push down in a rally or we just end up collapsing. It really depends on the market makers and the institutions and what games they're trying to play. If we end up gapping down, be on the lookout for that gap to get filled and maybe we come right back down, or it could be a fake out, right? And I know like it's so confusing for me to say it like that, but that is what tends to happen because these market makers, look at the way they're moving the market. We're just going back and forth. This is what the trend is telling us as of right now. Whether this trend continues or not really depends on CPI. Just know this, okay? Expect lots of crazy volatility, be very careful, and then if SPY gets a nice break above this 412 to 413 resistance, this thing could fly to 416. If it's the opposite that ends up happening, if the market comes down, we have support at 410, 408, and then finally 405, and below that is 400. Be prepared for anything. It really depends on the data. It's coming out tomorrow morning. Now, on top of that, just so you guys remember, I don't think I mentioned this yet. When CPI comes out, it's going to be 8:30 a.m. Eastern time, right? I'm sure everyone is prepared for that. But then after CPI comes out, we have lots of Fed speakers coming out. That's going to be very important for the Fed's monetary policy projections and what the market ends up pricing in. We have the Logan coming out at 11 o'clock a.m. Eastern time, right? I'm not sure if he's too hawkish or dovish, but I do want to note that Harker from the Fed is also coming out at 11:30 a.m. and he has a tendency of being dovish. He was very dovish the last time he spoke. He helped the market pump. And then Williams, I think he tends to be a little bit more on the hawkish side. He's coming out at about 105. I think it's not one, it's like two, I believe, 2 o'clock 2:05 p.m. Eastern time. That's when Williams is coming out. So we have some Fed speakers that are also going to move the markets. If CPI is a big shock and it ends up causing the market to crash, it's going to be worse later on because of the Fed. They're going to be very hawkish. If CPI ends up being a lot lower than expected or very close to expectations, there's a increased probability that the markets could be okay because we do have some Fed speakers coming, and Harker has a tendency of being very dovish. He might steal the stage because of that, right? So just be very prepared for that. I just wanted to note that. Anyways, going back to the charts, like I mentioned on SPY, we could make a big move up depending on the data, or if we come down, watch these support zones. For the triple Q, you have to remember that if we break 305, I'm going to be watching 308. If we break 308, then there's this 314 zone. I think first there's like 311. There's some resistance there, then 314. If we come down, you have to watch for the notorious 300. 300 is very important on the triple Q. If we break below 300, then there's going to be the 294 area. Now, I don't want to talk way too much about technical patterns and etc. They don't matter as much. What matters right now are levels and being ready for CPI. Finally, on the VIX, okay, we do have a breakout right here from this falling wedge. If the market's going to explode and continue to rally, we could come back to retest the wedge. This is going to act as previous. This was previous resistance. Now it's going to act as support. We could come down to retest this. The VIX could come down to the 19s, or it could come flying all the way back to 22 and even break above it on CPI day. We'll have to wait and see. Be ready for the data. On the dollar index, this thing is still showing some pretty decent strength. If it comes down, we have to watch support around this like 102.6 area. Resistance is going to be around 104. Overall, the uptrend is still relatively strong. This is still technically, from a technical standpoint, the bears do have a bit of an edge because of the breakouts from the VIX and the dollar. But as I mentioned before, it does not matter as much for tomorrow, all right, because it depends on the data. Now, anyways, that's almost enough about the charts. I want to now talk about Tesla. Let's talk about Tesla, the big dog. For Tesla, all right. I did predict that Tesla would try to get to about 200, and maybe because of the fact that the market was going to continue to rally. I was right about the rally, but Tesla came a little short. We ended up stopping at 194 for the day's close, and we actually peaked at about 196 today. So we came a little short of my prediction, which is totally okay. The real question is, what is Tesla going to do? From a technical standpoint, Tesla's a little bit weaker than the market, and that's because we are seeing buyers exhausted. If Tesla wants to continue pushing, if CPI ends up being a nice beat, let's just say CPI ends up being lower than expected, Tesla could continue to push up, and this thing is going to fight for this 198 to 200 resistance. If Tesla could break that, if we break above 200, we have potential to get this gap fill all the way up here. There's a gap, I think, around 206. We haven't actually filled the gap yet. I'm going to double check to find it. We also have a gap at almost 197, just around there. There's another one at 206, 207, around that zone right there. So we have two gaps on Tesla. If this thing is in favor of the bulls, if the market does get a rally off CPI, there's also a possible inverse head and shoulders like formation where Tesla could push up to get this gap fill and then push all the way back up to the 200s. It's very possible. So please be on the lookout for this formation. But at the same time, you have to be prepared for the other possibility. And that is, what if CPI is very hot? What if the market makers come out and they allow the market to come down? Who knows what they're going to be planning? Maybe they try lots of manipulation. Maybe big bears start coming in and we see major capitulation and the market collapses and people start to panic, right? I'm kind of joking around. But, anyways, if Tesla comes down and if it ends up failing, the first zone you have to watch for would be this 192 area. If it breaks below 192, it's going to come all the way down to 189 to 190, maybe more so around 189. And then the next major support, I know it did bounce off 187. That's not actually the major support. The major support from the past was 185. We could see it come all the way down to 185. And the big thing that's important is I think we have some gaps down here. We might start filling some of these gaps if Tesla does end up failing. Let me find it. And I think what's important about this is I'm going to use the hourly to find them. We might see Tesla start to come down and start filling a lot of these gaps down here. What is going on with my chart? Ay, ay, ay. Sorry about that, guys. Right here, if Tesla does end up coming down, I'm going to be watching this gap right here, 182. If Tesla breaks below 185, there's this gap at 182. And if the whole market starts to downtrend, you have to watch a lot of these other gaps that this thing has developed. There are actually a lot of them on Tesla. I'm not guaranteeing that all of them get filled, but historically, 9 out of 10 gaps do get filled. So just be ready for that just in case. That's really the best I can do for you guys. I do apologize that I can't really, give you guys a perfect prediction. I can't really use technicals to give you a good idea. The best thing we could do is just be prepared for what the numbers tell us, right? They could be big shockers. And the reason why I can't really predict this with high accuracy, or at least know that I'm doing that, is because the numbers could also be manipulated. CPI can be heavily manipulated when the data comes out based off what they want to happen, right? The market makers have plans from the back end and they use CPI as an excuse to execute on their plans, whether it's to push the market up, whether it's to push the market down. That's why you have to be very careful. So watch both core and the overall CPI. My guess would be that I think CPI would be a little hot because of energy, which might spook the markets a bit, but CPI might be core CPI, core might be as expected. And that's just my guess. I really don't know for sure, but just be prepared for anything. And please, please, please mitigate your risks, not financial advice, by the way. Thank you all for listening. Have a great rest of the day. Tesla to the moon because the long term future is still incredibly bright. And peace out.